Should you worry about your super's dismal performance in January? The year 2022 has so far seen the stock market shrink, which has dealt a blow to individual super funds, and undoubtedly it is a nervous time for many Australians, many of whom see an economic crash as inevitable and imminent. Superannuation in Australia was created to safeguard Australians entering retirement age to have enough cash funds to survive for the day-to-day living. However, an economic downturn may impact super's performance, and many could see that as a cause for panic. Firstly, in this video, let's look at what the average Australian super fund invests in. Please subscribe to the channel. And this article was written by the team of writers at Kalkine, and I'm happy to present it to you on their behalf today. I'm Sage for Kalkine Media. So what makes up the average super fund? Well, Australian super funds are fairly balanced in their investment approach, with most consisting of domestic shares, international shares, and the government bonds, as well as property and infrastructure. About half the average super fund invests in both foreign and domestic shares. The other half goes into the property, infrastructure, bonds, and cash. The reason for this spread is simple. By investing in various assets, the funds minimise their risk. So if the domestic market falls suddenly and sharply, that won't result in the fund falling to the same extent. It's the don't put all your eggs in one basket principle, which is a pretty good philosophy for any individual investor, by the way. So, why the sudden losses in super? When it comes to super, most Australians are in what's called a default account, meaning the management of their money is mainly left up to the super funds themselves. And as we've established, these funds invest in a wide variety of assets to minimise risk. The sudden fall in those default accounts, of which there are around 10 million in Australia, is largely due to the stock market's poor performance in January. Now, to add to local share market woes, there are inflationary concerns worldwide, which in turn is fueling rate hike speculations. And this, of course, is the fallout of an economy reopening after 2 years of lockdowns, as well as disruptions to supply chains. So how to protect against short-term losses? Until 2022, the recent years have seen super funds notch up the positive returns, double-digit annual returns in most cases, which is above the average of what you'd expect from an investment. Now, over the past decade, the average super fund has returned about 8% per annum. Although rising interest rates will likely not see that continue into 2022, there will be years ahead that might get back to those high return figures. If you like this information, please let us know by liking, sharing, commenting on the video below, and subscribe to the channel. Press that bell icon to be notified every time Kalkine releases a video. But for more articles like this, do head to the website. It's kalkinemedia.com. And I'm Sage for Kalkine Media.